These my dollars make it hurt.
So I heard that you want to have better entries. You want to identify market structure effortlessly, and you want to spot market opportunities like a hawk. Well, do I have the concept for you? This concept, right, is going to help you identify high probability entry points. It's going to help you identify potential reversal points, spot continuation patterns, and set picture perfect stop losses almost every single time. This concept is referred to as a fair value gap, otherwise known as an FVG. There's so many different strategies one can use once they learn how to really master a fair value gap. There's so many things that you can do, but we are going to just give an introduction to fair value gaps. And you may know what a fair value gap is, but I challenge you to really think about what you know about a fair value gap and really figure out if you are using it to its full capacity. If there's any other ways that you can actually benefit from this tool. We're also going to identify how to identify fair value gaps as they're formed and how to use them for entry points, for exits, and targets for take profits. So this is definitely going to be a action-packed video, and I'm excited to share this with you guys. It's a game-changing concept that'll take your trading to the next level, and all we're asking for is a like for the YouTube algorithm and a subscribe to see more educational concepts and trading content just like this in the future. So without further ado, let's jump into the video. So what exactly is a fair value gap? Well, before showing you what it looks like, I want you to think about a rubber band. The market can be just like that rubber band. When you pull a rubber band, naturally it wants to come back to where it started, right? If you move too quick, too fast, it'll snap right back. That's what naturally happens with a rubber band. And the market is like, oops, whenever that fair value gap is formed, it's basically realizing that it's moved too quick and displaced too much and has to come back to fill that gap. We think about magnets, right? When we think about fair value gaps, these gaps are just like that. The market loves balance. And when there's imbalance, it comes back and often comes back to fill those gaps. And that's where you'll come in. You'll be ready to pounce on that knowledge, knowing where exactly the market will return to. Or if we're forming biases and wanting to know what overall bias and overall direction the market is flowing in, we can use fair value gaps to help us do this too. And we'll get into that further in the video. So identifying fair value gaps. So notice this first candlestick right here. The wick comes up to this certain level, and then all of a sudden, when we close this wick, the next candlestick opens and then has an expansion. And there's various reasons for why that happens. We won't get into all of that in this video, but what we see is that after this candlestick closes, the next one opens and it's not able to push past this certain level. The wick ends right here. We see this as a bullish example. There is an expansion in between this candlestick's wick and this one that's formed right here. Here's a bearish example. Same thing happens. Wick, body, wick. That space between wicks is your fair value gap, boys and girls. That becomes your fair value gap. So we want to be able to mark these off on our charts. We'll get to the charts pretty soon here too. But just to identify a previous time frame chart, we can see these imbalances take off in certain areas. We have these marked off. You want to mark off your fair value gaps because it'll help you, especially when you're first learning out what fair value gaps are. It'll help you identify them so that you know where exactly they're occurring and where the overall market is going. Because if you see, for example, right here, this fair value gap is formed, market comes back down to retest, it is not able to push past it. It does not return to these previous lows. Instead, it respects this area. It sees, okay, you are a fair value gap that I want to respect. So it comes down here and it uses it as support. In fact, it's off of this exact area this fair value gap, that it now starts to continue in a buy program. So it'll continue and take off from there. And in the future, we can see that even when it comes back down here again, it does not have the power to truly get down there just yet. So we see stability. Now, you might say, well, I thought this fair value gap, right, as you said, was supposed to help me know where price is going to come back to. And that's true. Great question if that's what you were asking. But you want to be identifying what price is currently doing. You want to be able to read what price action is telling you, just like you would read in a book and understand what the words are telling you, what story it is creating. You want to be able to understand the story that the market is telling you. So right now, what I am learning is that the market is bullish. So it's used this fair value gap. And if we look over here, there's another fair value gap right here that the market is not significantly displacing through. It's not significantly breaking past these zones here. And when it gets closer to this previous fair value gap, most likely a very high time frame fair value gap, it uses it as support and then continues on in its buy program. So it's a really powerful tool that once you really get the hang of, you can combine this with other tools that will help form your bias and understand the full narrative of what the market wants to do next, so that you can get yourself into a very high probable trade without having to worry too much. This would have been a perfect entry right here if we entered for a buy on this down candle in the middle of this fair value gap. If we bought here and we just continue to hold, notice that price never came back down to this significant low. Not until we most likely took out high time frame liquidity right up here. As we see, this most likely was high time frame liquidity. Anytime price came back up here, that's when you could have even used that to enter as well for a short. But that's something we can talk about in another video. There are other uses for this, right? As we just discussed, identifying high probability entry points, identifying potential reversal points, spotting continuation patterns, and picture perfect stop losses as well. And that's the beautiful part about mastering concepts like these. Fair value gaps are just one thing, but you can combine this with other tools that will help you have the strong confluence and conviction that you need to take a trade and not really be worrying about what's going to happen next, because you know what's going to happen next. You've read the price action and you know where price is going after this. So let's hop on the charts and look at some examples. So here we are on our charts, and immediately we see that price has created a fair value gap for us. So we'll draw that out here. We notice that we have a candlestick right here, an expansion, and price is not able to go back down. So that is the fair value gap for us that we see the market has done. Now, instead of looking at that as top, we see that price, the trend overall is that we are going higher. So we're not picking top right here. We're going to identify this as a spot to form a continuation. So we could trade for a continuation and use this as support. And we can use this as support for as long as it applies, right? We take a trade, we use it as continuation, right, for a long. But once we get far enough away from it, we can start to use it as a target. So notice what happens as price goes along. Look at that. Boom. We come right back to it, and with the strength too. Check that out. Notice how we go through that fair value gap, but even this second one over here too, if I draw this out, look at that. We come right back and like a magnet, come straight back to this fair value gap. Beautiful example of what happens when price wants to fill in these imbalances that are occurring. Here we have another example of a fair value gap that's formed. Price is in a downtrend and it creates this fair value gap. We see we were trending downwards. Price tried to push up, right? Tried to come back up here, but it wasn't able to, and it closed, basically dojing out right here. So what happens next as price is trying to continue. Notice price swings into this fair value gap, but it's not able to significantly push past it. It's not able to come back and push and take out these fair value gaps. So what does that tell me? Well, it tells me that the overall draw on liquidity is still going to be downwards. We're not ready to come and take out these fair value gaps. So as I extend this over, we can see what price ended up doing. Look at that. It came back up to this fair value gap, which would have been a great entry for me, right? Enter right here on this fair value gap to continue on the draw on liquidity, which is most likely a higher time frame fair value gap target. Okay, so we're going to use this example to go into the lower time frames with and how we would actually use this to take a trade. So we've identified a 4-hour fair value gap that has been created right here. So what we know is that price is always going to return to this area. So we want to be patient and wait for price to come back to this area. This is our key level that we have marked out, so that once we come back to this area, that's where we are interested in seeing what the market actually does once we get to this level. So we'll play it out and see what happens. We're watching, being patient. Okay, now we're interested because price has come now into our area of interest. This is our fair value gap that we have marked off, and we're interested right here. So now we're going to drop down to a lower time frame. Let's look into the 1-hour time frame, and let's see if we spot anything interesting to us. So we see a few things here. We have a significant low created. Watch the story that price is telling us. So price is bullish, right? And it gets up to this area, this gap. It gets close to it and it respects it, right? And then pushes down, and we come down all the way here, a significant low. Notice this is a significant low that is actually a fair value gap right here. Isn't that interesting? So price comes here, pushes, and is not able to close beyond this fair value gap on the 1-hour, and it continues to fill out. Remember, the high time frame fair value gap on the 4-hour continues to push up into this, creates another significant high, respects this area again, pushing down into this area. We see the wick pushes far down, but is not able to close because it still has not filled out this gap that we marked off. So that is the story that price is telling us. You know, it is still pretty bullish overall right now, up until we fill out this gap and create this high right here. So this is liquidity right over here. So we can mark this off, a liquidity. So now we have somewhat of a range, right? We have a range, a significant high up here to a significant low right here on this fair value gap. Significant low. Now, as I have this range, I can drop down a little bit further into another time frame. Now we're on the 15-minute. Let's zoom in to see if we see anything interesting here. Look at this. We have a very small fair value gap. At least it looks like that on the 15-minute, right? But we're going to mark that off because this aligns with our overall bias. Just as a little pro tip for you guys, just as support can turn into resistance, a previous fair value gap can be used again. But that's something that we can talk about in another video. So we have a few things happening right now. We are on the high side of the range. We are currently inside of a fair value gap that we expected to be filled. And we've already drawn down a significant low in the range. So we are looking for price to go back to the other end of the range. And so this is a great opportunity to use our powerful tool, the fair value gap that we've drawn out here again. So let's watch and see what price does. So just as we expected, price comes back into this 15-minute fair value gap that we drew out. And as we can see, it is respecting this fair value gap. It is not pushing past forward it and creating new highs. It's coming right here and it is stopping in its tracks. So now we'll drop down to the 5-minute time frame and do the same thing. Price is very fractal, and on different time frames it does the same thing. So we can look at this play out where on this 5-minute fair value gap, let's watch and see what happens. Okay, so we see that price came back up into this area, but let's say that we weren't quick enough to enter right when we got on the fair value gap the first time. Well, what we can do is set a limit order right back on this fair value gap, and if we truly are bearish, more than likely we will revisit this fair value gap. We'll come back and tap into this, right? And it will be a very good risk reward, something like this, right? Because the range high is over there and that high is not going to get taken out. It's not going to get taken out again until another significant low is taken. So we can pick our stop loss really as the last significant low, but we don't even have to go that far. We could go closer or we could go even further down below, but either way, all of what we expect to get touched is going to get touched. As we see what is happening right now, price is moving along, we're coming back in, we got tapped in to that fair value gap entry. We're speeding this up here, and look again, we come back up and we tap into that fair value gap, and look exactly where we touch the previous significant low range right there. And you can look at this on the 4-hour time frame. And that is technical analysis for you in a nutshell. Like clockwork, price does exactly what we expect. This is how you use a fair value gap. This is how you trade with it, and add this to your arsenal. I challenge you to really add this and go ahead and backtest. Backtest this tool. Nothing is 100% perfect, right? But knowing how to use a fair value gap changes the game for you as a trader completely. Because if you really truly master this, you can take trades just like this on day one, because you understand what price is respecting, what it's disrespecting, and that's all from your knowledge of the fair value gap. We can talk about inverse fair value gaps in the future, but that is another tool that you can add to the arsenal. And we also talked about liquidity, high time frame liquidity and low time frame liquidity, significant lows. These are all tools that you can use in your arsenal that will make you a bulletproof trader. And so I really hope that you guys take the time to study this, backtest, because knowing these tools, knowing how to use them, will really elevate your game as a trader. And that is what we all want. We want to be able to make money at the end of the day, and learning how to use these tools will help you do that. So I hope you guys enjoyed the video. Please like, share, comment what you liked or disliked, and with that, we'll see you guys in the next video. Take care.